Morning, everybody. Welcome to Friday, the 15th of January, last trading day of the week. We are Signal Centre Talking Bull. Just myself and Steve O here today. How you doing, Steve?
Yeah, it's Steve O, mate. I've
Steve O, sorry. Yeah, you're down with the kids, aren't you? I forgot.
Yeah. I was just thinking if we change yours to Joe N, it'll be Joan.
Yeah. Or Joey Nabes.
Joey Nabes. Like it.
Yeah.
MC Joey Nabes in the house. So, yeah, no Ian. Look,
No.
he's not next to us. Not because of social distancing rules or anything. I don't think he's fit for it this morning. So, yeah, so you'll probably get some decent quality analysis this morning from FX. Joe's going to do it. Poor old Ian. Only joking, Ian. Cheer up, mate. Hope everything's all right. Yeah, so how do you want to start? Do you want me to just run through equities or?
Yeah, you can do. I mean, just a quick update on the news. Obviously, we had Federal Reserve Chairman Jerome Powell yesterday talking about stimulus or the exiting of stimulus, which was a little bit of a concern. And he's come out and said now is not the time to be talking about exiting ultra easy monetary policy, and pledged that the central bank will give plenty of notice before scaling back its bond buying program. On top of that, we've had Joe Biden stamp his authority on the US presidency, talking about an impressive $1.9 trillion package, which has been laid out by the president in waiting. I think there's about £1,400 per person in stimulus checks. So I think the market's been expecting this for some time. So there wasn't really a huge move off the back of that. It's been more of a case of buy the rumor, sell the fact potentially on that. So we'll wait and see what impact that has on the indices over the coming hours. It's also the start of the US earnings season. We have banks first up. So we have Citigroup, JP Morgan and Wells Fargo all providing earnings today. That's pretty much it. Obviously, there's COVID news, which we're all incredibly bored of. So I'm just going to not talk about that because we all know what's going on. And Steve, I'm going to throw it over to you to run through some charts for us on the indices and commodities, if you don't mind.
Yeah, not at all. So looking at the indices yesterday, a little bit of a stall in the rally, a little bit of a turnaround. Again, looking at FTSE, this obviously we had the lovely weekly candle last week, really pushed high, really tried to get up to that 7,000 level, didn't quite make it, and has reacted lower from the start of the week. We've just been under pressure, so it hasn't been a great week for FTSE. We can see this on the daily candles. Although it's a positive day yesterday, we've given up those gains already this morning. And on the 4-hour chart, obviously, which is probably from a short-term perspective one of the really sort of go-to charts, we've collapsed into the support from the cloud. So there'll be, I think really we got to look at the 6720 level as a key support level there, a break below 6700, and we could be giving up the gains over the last couple of weeks completely. On the DAX, similar sort of story. The 4-hour chart showing the negative price action over the last 24 hours and running into this support. Will support hold. It has done previously in the past, just about, but really for the line in the sand, as far as I'm concerned, on the downside for the DAX is around about 13,950. And that will see it break through the cloud and trigger some sell signals and look to get below that swing low. Same with the CAC. Won't go into too much detail on that. And same now with the US. The US is following suit. You can see the 4-hour charts. Actually, S&P's looks. I've highlighted this level the other week, 37. 75 was the level. We poked our nose below it, but have just reacted higher over the last few hours. So maybe a little bit of a reprieve there. On the Aussie side of things, that's holding up a little bit better. And the Nikkei has had its really first turnaround for the week. That's sort of like punched higher this week and having just a technical correction on the back of the rest of the indices worldwide. China, again, that poked below the support level, which was coming in at 18,334, but didn't stay there for very long. And the cloud has supported it. You can see the size of this cloud here. It's quite a thick level of support, so that might be able to enough to hold it. Hang Seng doesn't want to know. It just keeps going up and up and up. Wow. So that's good. Commodities, we've got, we'll look at gold. This is just a chart of drawn gold on the 4-hour chart from the other day. This was a sell trade idea at the start of the week. Hasn't quite made it to the target, obviously, but it posted a bit of a winner. But we're still in this formation, this channel formation, which still looks like a potential flag. But obviously, if this carries on too far, the flag sort of disappears. It sort of creeps up the pole and it's gone. So, but we're still negative in gold. I think short term that's going to remain under a little bit of pressure, especially as the dollars stop the fall. Silver, obviously this is the one I did on Talking Bull yesterday. Didn't do very well on it, got stopped out with this rally higher. Obviously I had this wedge drawn in yesterday, and you can see this is where we do predictive analysis, and we like to predict where resistance will be. But the gun to the head trade idea, we've just got to give a trade idea right there on the spot. We can't sort of like predict where we think the resistance will be. So that has rallied nicely to where the resistance was, just below the $26 mark, and collapsed quite aggressively from there back to where we were yesterday when we were talking. Copper, again, this is in a bit of a corrective formation, and we can see over the last 8 hours it's collapsed from the highs 368 to 362. Doesn't sound like much of a collapse, but that's quite a move in copper. And again, that's testing the support of the Ichimoku cloud, and looking like it could, this negative price action could feed through a little bit further. Joe, do you want to have a little look at the FX?
Yes, I will do indeed. I can't promise it will be as comprehensive as you usually get it from Ian, but I will highlight a few bits and pieces on the charts which are catching at my attention this morning. And what I'm seeing really is the potential for a few tops to take shape. I know obviously we've talked about this at some length and been waiting for particularly a bit of a reversal in the likes of the commodity currencies such as Aussie dollar and New Zealand dollar. They've been obviously quite strong in recent months as people have been seeking riskier positions, and therefore the likes of the dollar index has suffered as a result of that, because it's seen generally as a safe haven. But in fact, I'll start off with the dollar index. I think that we're potentially forming a bit of a bottom here. I know Ian's mentioned similar sort of things in recent days.
Joe, I've just got to answer the door. I'll be 2 seconds.
Yeah, no worries. So we've got a bit of a bottoming pattern taking shape there. I did have some sort of support, but it's very choppy price action around here, but it seems to have held quite nicely on that test there, around about 90 or just below. And we've seen a decent push higher. So I think there's potential for further upside there in the dollar index. Maybe we are forming a bigger inverse head and shoulders pattern, potentially. This being the left shoulder, this being the head down here, and potentially this being the right shoulder. So any break above maybe 90.60 to 90.70 may confirm that we have a bottom in place on the dollar index, and that would obviously suggest that we may see a correction in other assets as people are flocking to safer haven assets. Looking for clues elsewhere on the Aussie currencies, the Aussie dollar versus the Canadian dollar at some key support here at 98.12. If we can break that on a closing basis on the hourly chart, then I think that could spark a bit of a corrective move to the downside. Aussie US dollar, was talking about this earlier in the week, and the potential for a head and shoulders top pattern to take shape. I've talked about it many occasions, but I like the 78.6% level when kind of looking to preempt a head and shoulders top pattern, as that being kind of the last chance saloon for a right shoulder to form. So 77.87, I think there is potential resistance there, as we've seen. We've got a neckline down here at 76.86 roughly. I'd prefer to see it break this 76.66 to confirm, and then it could be a case of selling down to 75.12. So Ian's just joined us. I'll let him in. Hello, mate.
Hello, mate. You all right? Sorry
Yeah,
about
good.
that.
That's right.
That's all right.
Bit of snow issues.
Oh, really?
Snow on the line.
Snow on the line. No, Charlie, it's sheet ice out. It's hacked it down yesterday, and then went all slushy last night, and then it's frozen overnight, and everywhere's like a bloody ice
Oh,
rink.
Oh,
No,
not nice on your hill.
Yeah, we're. And I couldn't get in. Charlie's had to walk to work, and he's got halfway to work and realised that he's left his work keys in his car.
Oh,
and then
fantastic.
and then I can't get in the car because the car's frozen up.
Should you just had a webcam following you around?
It would have been great, wouldn't it? But
That'd
have been much more entertaining than this.
I managed to break into it. I got some de-icer, so all's good. A lot of effing and blinding from the young man this morning.
I can imagine, poor thing.
And everyone's
yeah, I bet they are.
Yeah,
his dad's favourite word. Yeah.
Just talking about potential top patterns forming on some of the dollar pairs and potentially a bottom pattern on the dollar index here. And I don't know if you've got charts ready. You're probably better positioned to talk about these things than I am.
I've got this. This is the dollar index, but. So we made it down to this 51.8%, the 50% pullback level. But like I was saying yesterday, the prime is here. But if we break this, then I think this is complete, basically. So you've got this resistance level here at 90.52. So it's really, I wouldn't say in no man's land. I would say we're more bullish. I mean, after it was 6 o'clock is chitter chatter yesterday, wasn't it?
Yeah.
And we've drifted a little bit higher, but it's not, I wouldn't say it's any by any means aggressive. I think what we have seen is a real run on the other risk currencies, which is the yen and Swiss. Sterling Swiss is turning over, sterling yen, Aussie yen, and the Aussie in particular overnight got a good slap, and I think there's some interesting pairs there. But going back to sort of the dollar base ones, I'm still a little bit wary of this, and just this 261.8% fib. If we look to the baskets, then euro. I'm just going to go to this one. Euro as a standalone currency has just hit a 261.8% fib, and it's starting to move higher. Got a bullish outside bar in the basket, so I don't know if I'd want to sell euro dollar here. I'd want to sell it here, definitely. I don't know if I want to sell it on this break. I think it still looks a bit too much like a neckline to me. Dollar cable is turning over. Euro sterling is starting to move to the upside, but again, I don't know if we're just going to get that little bit more of a push lower in the dollar index just to complete this pattern. Again, we're really in sort of no man's land here at the moment, aren't we? I mean, selling rallies, sort of buying dips at this reverse trend line maybe. And dollar Swiss is similar. I think prime is still down here, but are we going to get it, or is this going to be sort of an ascending triangle or just a consolidating triangle, and then we're going to break to the upside? So I think the dollar wants to go. I just don't know if it's the right time for it to go yet. Canada, and again going to the baskets, this was quite interesting. CAD hit a 61.8% fib up here, and we started to move to the downside. So basically, that commodity currencies, CAD, Aussie, and New Zealand, all in these baskets are all moving lower, and all the risk currencies, apart from the dollar, are moving higher, and euro looks bid. So we've got quite a big sort of mixed package, if you like. And again, that's sort of the prime area for Aussie dollar was up here at 78.61, but I don't think that's going to make it now. I think this could well be a sort of top in formation. Euro sterling, as I said, prime longer entries down here, but I'm just wondering if we're getting just rallying a little bit in front of that. outside bars in most timeframes on euro
Scroll to
sterling.
the left, Ian. You can see that it's touched that level on 4 occasions where it's right now.
Yeah.
There you go. Look at that.
Yeah. And then
Even
confluence
more.
here. Yeah. Looks primed, doesn't it, for a bid trade of the day.
Already got it.
And then euro yen. Apart from that sort of that euro bias, euro yen's looking quite bearish, really. But I think you'll have to wait and see what happens with the yen basket, really. But I like these. I like sterling Swiss just coming off the top. This is a nice cipher pattern on the 4-hour chart, and I don't think that's going to turn around. But I think that's mainly going to be Swiss strength, not sterling losses. That's it, really. Aussie Swiss, I thought was quite interesting on a long-term basis. Where is it? Did a report on this yesterday. You've hit lots of levels. So 161.8%, 69.22 on the 8-hour chart, and then on this time frame, we're at 261.8% fib overnight, and the medium term, which is this one here, got a 61.8% fib here at 68.65, and of course a really good risk pair. So risk off, obviously sell Aussie, and obviously buy Swiss. So it's starting to move quite aggressively to the downside this morning, or overnight anyway. I don't know what you're thinking on indices. You think any? Is it still in no man's land, or?
Yeah, a little bit under pressure over the last few hours, really. I don't know whether the markets have taken a look at what Biden's proposed, the 1.9 trillion bailout, and then looked at it and thought, yeah, it's great, but is it, we've got to pay it back somehow, and how are we going to pay it back? Are we going to do it through taxes? Are we going to do it through interest rates? I don't think they're going to do it through interest rates. I think taxes are the way forward, and then you sort of start to think, well, how will that affect all the big corporations as well?
And you did think it was just going to fly through, and supposedly he's got quite a lot of opposition, hasn't he?
Yeah, I mean, like Ian was saying earlier, that some of it's about a quarter of it's made up of £1,400 a person checks. They're talking about raising the unemployment insurance weekly from $300 to $400. That's 350 billion of it again. So just under a quarter. Providing funding for schools to reopen, expand the child tax credit. I mean, they're all sort of like great things, but it's at the end of the day, how are we going to pay it back?
Yeah, that is the big question.
I think the markets over this coming sort of like year or so, it's going to be a bit of a realization, a bit of a wake up call that this is creating a really big issue, and I don't know how far they can kick the can down the road for someone else to deal with it.
Yeah.
Just one more chart before we move on to the gun to the head stuff. Bitcoin. We talked about this earlier in the week.
That leads to my gun to head.
I'm not taking that. So, but potential for this head and shoulders formation yet again. We've got a 78.6% level at 39.442, and it's pretty much rallied into that level and failed. So, is this the beginning of the last leg of the right shoulder before we get down to this neckline, or have a go at breaking it? Yeah, interesting. I had a go on it earlier in the week when we were around here. Got stopped out, obviously, on that rally higher. But is this the last sort of chance, maybe, for people to take profit on the back of this spectacular run higher before we have some sort of decent correction? Maybe.
Don't start all that Gartley crap thing. Listen to me. Now look at that right shoulder. You've just sort of like highlighted my gun to head challenge, so we'll run quickly into there. Or do you want to go through what the results are first?
There's nothing good to say about that, unfortunately. We had 3 stop outs yesterday. So after making a decent bit of ground, we had 3 stop outs. Unfortunately, the wins that we've had of late haven't been particularly big. So yesterday's damage was pretty substantial, obviously on the back of that. So, hopefully, Steve, you're going to nail this Bitcoin trade.
Yeah, we're going to change that today.
Yeah, go on in. What you got?
Obviously, Joe's showing you the larger head and shoulders pattern, but if you break down
That's
the
only
right
on the
shoulder,
hourly chart I had there.
yeah, exactly. But it's sort of it's this bigger one that you're talking about.
Oh wow!
But if you look at the right shoulder, this is a 30-minute.
The measured move goes down to -0 on that, doesn't it? Minus 100 or something.
Get out of it, does it?
I'm only joking.
Well, I'm looking at just the right shoulder. So just not that I'm sort of like absolutely negative on Bitcoin. I watched a great piece yesterday and from Real Vision, and it was posted back in October when Bitcoin was 12,000. And what's the name of the guy that?
Raoul Paul.
Yeah, Raoul Paul. Yeah, great.
A lot of followers, that boy.
Yeah, have a look at his stuff. It's really, really good. It's sort of it's great because it's in layman's terms and it explains a little bit more about the economy and how it works and how the potential for this Bitcoin is astronomical. So overall, it did change my opinion slightly on Bitcoin, but I'm still going to sell it today. So this is just a short-term technical trade. Honestly, I don't hold Bitcoin, and I this is my trade idea. If I was holding Bitcoin, I might take some profit in it and look to buy it back a bit cheaper. So anyway, left shoulder, head, right shoulder, neckline comes in at 38,650 or 38,570, and it's reacted lower over the last hour. So this gives us a good opportunity to play this correction with a really tight stop on it. We'll like tight stop. So 38,142.89. I'll just round it down to 42 just to make things a little bit simpler. And obviously the high is 38,640. I'll give it a little bit more room than that. 38,742 because the spread is quite wide in that. So that's a 600 cent stop. So I'll, relatively speaking, we can sort of see it moving down to the measured move target is 36,375. So if I go just in front of that, how will that look? 2.83 to 1.
Boring. Go for the big one.
Scream it all the way down to that little yellow line.
All right, let's go for it, shall we? I mean, if it does collapse, I mean, this trade might collapse.
We need a 15R, don't we, to get us off the.
How about that? 10 to 1. And it takes us down to in front of this channel level and also around about the previous swing low. So yeah, once we break 36,000 level, then it could quite easily open up this extended move lower. And you know, Bitcoin is one of those markets that, you know, just needs a sort of like a bad word from somewhere and it slams it, and then the buyers come back in again. So overall, medium long term, would still be looking to buy dips in this.
Cool. Thanks, Steve. Good luck. Ian, do you want to go?
Yeah, I'll have a go. I'm just going to go for that sterling yen. It's run a bit, but
sterling Swiss
even. It's still got potential. So getting short at 121.15. Stop at 121.65 with a target at 119.69, which is just this previous support area here. For all the reasons I said before.
Lovely. Okay. I'm going to take a look at Euro Sterling. Got a daily chart up on the screen, and when Ian was talking about it this morning, there were a lot of support levels around here at 88.86. So number of occasions in the past we've seen this level hold. We can refer this back here to April, where it acted as resistance on 4 occasions before then breaking out here, and then since then it's acted as a mighty fine support level. So hoping it's going to do a job again today. Posted a decent looking candle over the last hour as well. A nice bullish outside candle there, pushing higher already. So better jump on that. Going to buy it now at 88.92. The original target I had was there at 89.42. That won't give me enough R, so I'm going to push it a bit higher up to 89.89. Stop loss at 88.64. Looking for 3.5 R on that one today.
Well done.
Good luck.
We shall see. Right, so that rounds up
the figures out this morning. The
ball for the week. Ian, what have we got on the docket today?
I'm going to say we had loads of sterling figures out,
yeah,
which are really crap, aren't they? Lots of red on the board.
Were they better than expected or worse than expected?
No, worse. Worse than expected is as to be expected, isn't it? I would have thought, but trade balance is crap. Manufacturing, industrial production, both worse than expected. GDP month on month, better than expected.
Okay.
Maybe a little bit of a mixed bag.
Well, we've both gone selling sterling this morning, so
yeah, retail sales. What's that? Retail sales control group. Never heard of that before. Retail sales normal one there. That's one to concentrate on. Out the US.
Michigan consumer sentiment.
Yeah, and that's it.
And as I mentioned before you came on, we've got earnings season starting in the US today. So we've got 3 banks reporting: Citigroup, JP Morgan, and Wells Fargo, all producing numbers.
Shocking, aren't they?
Well, you'd have thought so, wouldn't you? But
this is, I think this is quite relevant if you're holding positions overnight, over the weekend, very early, Monday morning, retail sales, GDP. Yeah, especially if you're holding Aussie.
Okay. Excellent. Right, well, I think that is pretty much us done for the week. Good luck with your trades today, gents, and hope everybody who's watching has had a good week on the trading front. And we'll be back.
Just a little question
on Monday. Go on.
Obviously, inflation, obviously no growth last year. Inflation's down. Are we still going to sort of base interest rate decisions on inflation this year, or are they going to look at different things to base it on? Because obviously it's if we start to get a bit of growth in the economy in a few months' time, when we come out of lockdown, if we come out of lockdown in a few months' time, are we still going to be looking at inflation? Because inflation will start to sort of look pretty aggressive, I imagine, when people start spending. But it's really a false inflation.
Put interest rates up to curb it.
Something to think about. I'm going to have to.
I think it'll be a tight balance, won't it?
Yeah, I think you've got to. I mean, because like some, Bank of England look at inflation targets, and Fed look at inflation targets. So I think it's something they've got to look at something different. Maybe, don't know.
Possibly. For another day, I guess.
Yeah.
Tired this week. Had enough.
It's been a long one. It's 28 minutes long.
Yeah. Better wrap it up then, eh?
Yeah, there's no one watching.
We've got 8 viewers. Do you mind?
Right. Have a good one then, gents. See you.
Enjoy.
Cheers. Have a good weekend.
Bye.
Yeah, and you. Bye.